blockchain's next target. Please can I welcome Matt Zimmermann, the Chief Technology Officer at Etherisc.
Thank you so much.
And we have some mics here if we have any troubles.
Okay, thanks. Great.
So, Matt, Etherisc is a company that works on introducing blockchain to insurance. This is what we're describing as blockchain's next target. Our audience might not immediately be aware of how blockchain can be applied to the insurance industry. So I was hoping you could start by telling me a bit about that.
Well, thank you so much for that question. You could also rephrase it. It's like us trying to introduce insurance on blockchain. So we come from a technical background. So the insurance is already known, and there's a lot of DeFi. But in that space, insurance is almost non-existing. And our gamble is that financial stability is something that will always be here, is always there. And as soon as there's more mainstream adoption of blockchain, you cannot avoid there will be insurance on top of it. And then we, as the pioneer, we want to be there. So it's kind of a gap. The insurance industry has a very strong habit of working on data, especially in the past. These were actually the first guys that were building their business on top of data, which you need to do actuarial and risk assessment and basically coming to a price for the premium. And at the same time, these days, when there's tons of new and innovation in the technology sectors, you could almost see that, as ironic as it might seem, insurance industry is kind of lacking a little bit in adopting of new technologies. So what we try to do is to make it as simple as possible with your use cases to basically move to the blockchain space.
Thank you very much. And I think one of the key areas here that blockchain can do quite well in the insurance industry, but which is also an area of growth in kind of trad insurance, is parametric insurance. Could you tell me a little bit about that and kind of how it differs from the traditional sort?
Yes, that's a very interesting thing. The parametric insurance is, for the insurance space, something that is kind of newish. Many traditional insurers start to adopt parametric insurance, and the big thing about parametric insurance is to change the dynamics on how claims and payouts works. The traditional way is the insurer comes to your place, assesses the damage, and then comes up with a price tag, and that's what basically defines how much payout you get. But this involves a lot of energy and resources and time and money. So it would be really cool to have a much more efficient way to do that. And this is basically the promise of parametric insurance, in a sense of, let's say, you have a house and the risk is flooding. The traditional way, somebody from insurance company is coming and looks at your basement and see how bad it is, and then they determine the payout. The parametric way would be, I don't come to your house. I look at rainfall data. I look at the position of your house. I might look at satellite pictures, and then I will come up with a number for your house, and you get a payout. So you can do payouts faster, more automatic, and this is a huge difference. And that can be very attractive, especially for us. Parametric insurance is very nice, because if the payout is based on just on data, and the buyer of the policy agrees that this will trigger payout or no, then they know exactly what they buy, and usually they get their money much more quickly than with traditional insurance and way more effectively. This is something that will certainly come. There's also risk attached, which is called the base risk, because let's use crop insurance, for example, and drought. You might have had a harvest, but the data says that there was too little rain and you still get a payout. Nobody will complain about that. It's more the other one of the base risk, which is basically says that there was drought, but the data says, well, there was a little bit of rain, you don't get that much payout. So it's you as a consumer, you need to know what you buy, and if you realize what you buy, then parametric insurance can be a very big shift.
It also, just hearing you describe this way of defining insurance, so it's based on a metric, hence parametric, rather than the amount of damage done. Kind of the data goes in, the payout is kind of automatic. It can be made immediately between insurer and client. It sounds like something that is suited to, this is exactly how people talk about blockchain contracts, it sounds like it's something ideally suited to do on blockchain.
Yes,
is that right?
it really is ideally suited because it's basically automation is almost built into the concept, which is directly supported by smart contracts. And what makes blockchain so interesting for us is it basically means that you have programmable money. And if you have programmable money, you can program whatever conditions you want. Why not program conditions that are linked to indicators or data where both parties, the buyer and the seller, agree? So this is something like a natural combination. So we're not limited to that, but that is what we believe is one of the most interesting topics for the near future.
Thank you. And now another topic that comes up whenever you talk about blockchain or the related things like crypto and Web3 is this idea of democratization, the idea that putting things on a decentralized system can make them available to many more people. It doesn't rely on central counterparties. And the natural extension to insurance is the people who are actually putting up the risk capital. At the moment, it's a kind of a small group of very wealthy organizations and individuals who provide most of the insurance risk capital. Is there potential for applying blockchain to broaden out that pool and allow more people to insure?
Yes, I'm convinced there's enormous potential in that area. Traditional model says that if I buy a policy, I choose my insurer, and then I buy the policy, and I don't have a saying. So there's kind of no transparency in the pricing almost. There's almost not a lot of transparency of previous payouts of the same insurers to cases like me. This is completely changed by the on-chain nature of the business. So not only can I better look what has happened in the past with the supplier of that product, but if I switch roles, if I'm the investor, I can look how they deal with risks, how much payouts they had, how big my risk is, and maybe I can say, I mean, I'm prepared, let me invest in that risk pool because I think I want to diversify my portfolio out of financial topics more into catastrophes or weather-related risks or other risks, and I can exactly choose where I put my money, and I can look at the transparent track record of that vehicle. So it creates a direct link from the investor to the policyholder with a seamless flow of money from one place to the other place. So everything is transparent and open. Maybe not short term, but it can almost not be that this has not a fundamental impact on the whole setup of industry and insurance.
Sorry, this is all sounding wonderful, and like, you know, blockchain is sort of made for the insurance industry and is how things kind of ought to be run. What do you think the biggest blockers, as it were, are to this actually happening? Obviously, this is still a corner of the industry rather than...
Of course, there's multiple corners or multiple challenges to move to that thing. My favorite analogy is to try to look back what happened to the internet. Now, if you go back 25 years, we had the dot-com bubble, and all the traditional people felt that they were right, this cannot possibly be something anybody wants. There was just too much money thrown at strange ideas too early. And compare that to where we are today. Life without the internet would not work anymore. If you use a mobile phone, or social channels or chats are running over the internet. If you do banking, the whole banking interface runs over the internet. The times where people felt uncomfortable to use their credit card to spend money on the internet have long been gone. At that, like 25 years ago, nobody could imagine a scenario like that. So it feels very similar to me. So now it's like big organizations sometimes find it hard to adopt new technologies in a short time frame. Regulators take time to adopt and to see what can come next, which creates a large uncertainty in the space, which can put off many people. Then usability of blockchain, like whoever has tried to buy something with tokens using wallets knows that this is really not the experience you're looking for. So we're still very, very far away from a good usability for the normal person. So it's really the people that are convinced and really want to invest time and their personal efforts, they can do this. But for a normal person, this is still far away. It can be done. There's no big principal hurdle to do it, but it will take some time. So we have the tendency, short term, to overpromise, and over midterm, to not really see what can happen.
One of the things one of our earlier panelists brought up in a different kind of application of blockchain to finance is that kind of getting over this barrier of people associate blockchain with some scams that have happened basically over the past few years, or with however tenuous the link with random crypto coins that were actually kind of ways to steal people's money. And obviously blockchain is a general technology. It doesn't really have much to do with any of those things,
exactly.
and scams are part of normal finance. But how do you find kind of convincing people to kind of get over that barrier and associate blockchain with a new technology rather than the bad stuff you heard in 2022?
Well, now you got me in a tight spot, because this is not what I'm good at. This is why I brought the analogy with the internet. I was starting to get excited about AI in 1990s. It was hard to explain to anybody what that should be. I was started to get excited about the internet in 1995 or something. I couldn't really explain to my surroundings why I was so excited about it. But when I first read about blockchain, like 2016, about Bitcoin, I was amazed. It was like in my mind, everything sprung up. But then I wanted to talk about that because I felt enthusiastic. I completely failed. So for me, the big thing is, if you have something about like reliable, programmable money, if you have this in combination with an immutable ledger, and let me maybe drill down a little bit why this is important. If you come from the regulatory perspective, one of the jobs is to make sure that you know which transaction happened, who did start the transaction, and what the result of it was. In traditional IT, this is something that is very, very hard to have. Good and reliable logs of transactions that actually happened is very, very challenging. And with blockchain, it's just there, it's free. It's almost like, as a regulator, you couldn't wish for more than that. You have full transparency, all the transactions near real time or in real time, and you can use this to basically monitor whatever you want. So this is baked in fundamentally. So if regulators are slow to adopt, it could also be that if they change their perspective, if they could see this as a huge opportunity instead of being afraid of it. It's also a lack of communication between people that are enthusiastic about technology, like me, and regulators that come from a different angle. That certainly needs a lot more interaction in the future. But in principle, I do not see any barriers for transformation.
Absolutely. And what's your sense of how regulators are thinking of it at the moment, or maybe how their views on blockchain in the insurance industry might be shifting? Regulators have traditionally been very cautious about new innovations in insurance.
So we at Etherisc, we went through that example. We went through BaFin, which is the German regulator, and just a very, very simple prototype. We wanted to know how we can legally sell flight delay insurance based on blockchain. It turned out that, my mic still, all right. It turned out that the hurdle was using the word insurance. Insurance is a legal concept where you have to prove to the regulator that you can do payouts. If you're on blockchain and you have smart contracts that are reliable, that can be reliable, they can be audited, you can create a situation that is basically solving the regulation problem. No, because you can build smart contracts that hold the necessary capital to do all the payouts. So basically the task of the regulator can be solved by this platform, and which is very different from the legal thing. So we never get a legal license for that, but basically we agreed with them that if we call it a protection product and not an insurance, and especially if we teach the users that this is not an insurance, but a protection product that does not offer the same legal guarantees, and if they still buy, then we're good to go. This applies for the European part. Our experience is also whenever we think about coming close to the US, it's very, very different. So we better not touch any US citizen or any US business, because it feels a bit messy. It seems that the regulators in the US have a tendency not to exactly specify what they accept as good and what is bad, but they'd rather want to observe a little bit longer and then hit at organizations they feel they were not really correct. So we're in the middle of regulators catching up with technology, and technology realizing that the initial idea of blockchain, that there's no legal anything required at all, was also overly optimistic, because it will always be human that program, they will always make mistakes, so there's always a need for some governance that is also outside of technology.
One of you've touched on the strength of programmable money here, and one of the best arguments I've heard for introducing blockchain into finance is, if you have money that can come with programming, that is just bound to spark innovation, because people will figure out what they can do with the programming, and they will do things that you would never have thought of. One of the best examples for this, I think, with Ether is the exchange Aave, the automated, decentralized exchange that kind of got through wild market moves in 2022 and 2023 without any disruption, but it was entirely programmed. What do you think there is the potential for blockchain and insurance to lead to insurance innovations that we might not have predicted?
I think one of the aspects what it can do is open markets that have been closed so far because they were too small or too complicated to address or to find distribution channels. If you accept that a token can represent the value, especially these days with stable coins, I think one of the people here will be a person representing Circle, which has a USDC stable coin. And you can basically collect stable coin anywhere on this planet within a few seconds, distribute that, use that in programmable money scheme, and you have a worldwide distribution channel. You can build systems like that in a few weeks or a few months. That was completely unthinkable before. So a lot of traditional energy went into the way on how to handle money safely, and that part you can, in certain conditions, this is already solved for you. But it's not used yet because the amount of the population that is actually making use or taking advantage of this is still very, very small. So we are far away from mainstream adoption. The biggest adopters are countries where you don't have a lot of choice. Now, if you have hyperinflation, last year I think I was in Istanbul in a conference, I walked out of the hotel room, 2 kiosks in front of me, they both sell Bitcoin and Ethers. Like at the kiosk, to a people where you think, you wouldn't put these people as your first target as tech savvy, but if the need for something like financial stability is high, and this is one of the options, they just go for it.
Absolutely. You touched there on underserved markets, and that's kind of one of the most exciting areas for introducing blockchain into insurance, but again into lots of different bits of finance. I wonder if I could finish by asking you a bit how you see the kind of insurable areas in emerging markets developing, perhaps as a result of new technology.
Yeah, if I may explain a little bit of the background of projects we did in Kenya, and which is basically creating insurance products based on blockchain for smallholder farmers, insuring drought risks for the farmer. So if there's no rain, they won't harvest enough, and then they have no food, and especially they cannot sell part of their harvest, so there's also no money. Many of these farmers have several challenges. One challenge is they do not have access to traditional financial services. Like they do not even have a bank account. In Kenya, it's kind of easier because Kenya was one of the first countries that had widespread adoption of M-Pesa, which is mobile money. So you don't need a bank account to receive and send mobile money. Through that channel, you in principle can collect premium without the person needing to have an account in the first place. And if you receive money through that channel, you can immediately prompt back basically the policy ID, so the farmer has received some confirmation that is actually insured. And another challenge is that farmers, they don't have enough money to pay the premiums. So this is usually heavily subsidized by governments or by non-NGOs. And we are currently looking at something, how this gap can be resolved, because if nobody can pay premium, there's no way you cannot make a business out of that. So the farmer needs to have money in the first place. How do you do that? There is at the same time, these guys are affected by climate risks, which is bad for them for the harvest. But there's also opportunities. Now, there's something like carbon farming, where depending on the farmers plant trees or looked after tree, you can, if done well, you can collect carbon certificates or revenues from carbon certificates, and suddenly it's feasible that there's an income stream for these farmers. Why does this matter? It's because it's not just 1 or 2 farmers, it's like 500 million farmers that are in the same spot. And they're all affected. The most affected are usually the ones that also do not have money. So that's basically a huge opportunity. I feel like a combination of mobile money, blockchain, parametric insurance, and then what we did not yet talk about is strong distribution channels on the ground. That could be really a killer combination.
That's a really exciting note on which to end, because sadly we've run out of time. Matt, thank you so much for speaking to us today.